Hello, Jerry Walker CPA here, founding partner of Coburn, Cheshire and Walker CPAs, to discuss how to save federal income taxes by bunching your itemized deductions. There was a significant provision in the One Big Beautiful Bill signed by President Trump, July of 2025, which will expand your opportunity to claim itemized deductions. As you know, each year you have the choice of either claiming the standard deduction or itemizing your deductions, whichever is higher. By bunching your itemized deductions into one year, you may be able to exceed the standard deduction and save some taxes. To execute the bunching strategy, you simply need to pay your itemized deductions all in one year. Let's look at a couple of examples. This first example is going to be without any bunching, and then example number 2 will show the bunching, and you'll be able to see the difference pretty clearly. So first, we'll consider property taxes. We've got the 2026 year in this column, the 2027 year in that column. And let's assume that you paid your 2025 property taxes in January of 26, as many taxpayers do. And then let's assume you pay the 26 property taxes in January of 27, as many taxpayers would normally do. On top of that, we're going to assume that you've got 15,000 of mortgage interest and 5,000 of charitable contributions. When you add up your itemized deductions, they total 32,000, but the standard deduction is $32,200. So because the standard deduction is higher, we're obviously going to claim the standard deduction rather than itemized deductions. And then once you get to 2027, it's basically the same thing. We've claimed 12,000 of property taxes, 15,000 mortgage interest, 5,000 charitable contributions. We get the same results. So over the course of 2 years, we've deducted 64,400 without utilizing any bunching. Now let's look at the next example, including the bunching strategy. So under the bunching strategy, not only would you pay your 2025 property taxes in January of 26, but here's the key, you would pay your 2026 property taxes in December of 26. So you would be bunching 2 years worth of property taxes into 1 year. By doing so, now you have 44,000 of itemized deductions, which far exceeds the 32,000 standard deduction. So we have additional deductions this year, and we're going to save tax. Now in 2027, you're not going to have any opportunity to bunch because you've already paid those 2026 taxes in December 26, so you don't have any taxes to pay in January of 27. So in 27, you're just going to concede that you're going to claim the standard deduction, but then again in 28, you can restart the bunching strategy again. So as you can see, this is going to benefit you every other year. So let's recap it. Without the bunching strategy, we're claiming the standard deduction each year for a total of 64,400 over the course of the 2-year period. With the bunching strategy, 44,026, 32,200 and 27, 76,200 total. So we claimed an extra $11,800 of deductions over the course of the 2 years. Assuming you're in the 24% tax rate, your tax rate could be higher or lower. 24% of 11,800 is $2,832 of tax savings. Now, that's not going to completely eliminate your tax bill for the year, but I do suspect that you and your family can use that $2,832 more wisely than the federal government can. Now, bunching doesn't apply just to property taxes. You could also use it for charitable contributions and potentially medical expenses if your medical expenses are high enough. So who does this work well for? Well, if your itemized deductions are routinely relatively close to the standard deduction, and if you control the timing of your property tax, charitable contributions, and medical expenses, then this should work perfectly for you. Who does this not work for? Well, maybe 2 scenarios. Number 1, if you don't have any control over the timing of your property taxes. In other words, if your property taxes are paid through escrow, and that is something you cannot get changed, then you don't have the power to bunch those property taxes, and maybe this strategy won't apply. Or even after bunching your itemized deductions, you're still not able to exceed the standard deduction, then this does not apply to you. I hope this has been helpful. If so, like and share with your family and friends. We always strive to provide practical, legal, ethical tax advice. We see a lot of tax advice shared on social media. It's exaggerated, sensationalized, and some of it's just flat out bogus. So I hope you have a great day.